everybody? Thank you for being here. Thank you for joining me, folks. This is going to be another episode for my Trading Quotes playlist. As you see in front of you, these are the books I'm proud to say that I have published. And my new book is out, The Trading Journal. So I'm going through. I'm making Trading Quotes completely free, 100% free. So I'll head over to my YouTube at Ched's Trading. This is the playlist, Trading Quotes, and let's see where we're at here. We've done all these weeks. I'll add this one to the end when I finish recording it, and I'll get the whole book for you for free. I'm, of course, Big Cheds on Twitter. You might know me from there. And I'm a founding analyst at Bitcoin Live, where I do the twice-a-week full market report. Folks, you want to check out this Trading Encyclopedia Daily Education playlist. I'm putting out 3-minute videos every single day, 3 minutes a day to learn professional technical analysis for free. A lot of great content. People are loving this. It's a brand new thing I started here just a couple months ago. So check that out. But enough about all that good stuff. We are here to talk quotes, and we are here to talk about weeks 18 and 19. So without any further ado, week 18. Monday. Stop risking your hard-earned money on someone else's narrative. When you enter a trade, it has to be because of your idea. It has to be that you have a good trading idea, not because someone else thinks the price should be higher. Somebody else thinks it should be this, it should be that. That's their narrative. That's their idea. That's the story they've told themselves. And when you're risking money that you worked, this is your hard-earned money, right? You don't want to be so cavalier or casual with that. Someone else's narrative, fine. That's their own story. That's their own excuse. That's their reasoning. You have to trade based on your system, your methodology, your watch list, and your ideas. You can listen to someone else's narrative and then say, great, I hope it works out for you, but you need your own narratives, your own thesis, and your own trading ideas. So stop risking your hard-earned money on someone else's ideas. Tuesday, if you buy something and immediately feel uncomfortable, you probably have too much money in that play. This is one of my favorite quotes, and I know I say that a lot, but it really, for me, it's like an arrow. It's like a laser pointer right at the target, because it's happened to me so many times where you enter the trade and it's just something doesn't feel right, and you're worried, you're scared. You're worried about losing money, and it's money that you can't afford to lose. It is money that you're worried about because you don't have confidence in your trading idea, because it's too big a position. We tend to get emotionally over-involved with these big position sizes. So when you find yourself in this position, exit the trade and maybe try again with a smaller position. Figure out a position size that's emotionally comfortable for you, that is a size that allows you to stay patient, to continue observing the price and the price trend, and making good decisions that are not affected by being emotionally over encumbered. So this is a huge clue. If you enter and you're feeling uncomfortable, something is wrong, and it's probably that you have too much money in the play. All right. Wednesday, don't let your losses define you. Let how you recover from them, learn from them, and succeed despite them define you. This is wonderfully true. You are always going to have challenges in life, and how you respond to these challenges will in many ways define you and define your character. It will define how people know you, what they think of you, what they remember about you. And when everything's great, back to trading, when everything's a bull market, everyone's a genius. But in bear markets or difficult times, what defines you is how you react from it. We're all going to have to face these challenging situations. Focus on the idea that you can grow, the idea that you have to fail in order to get to where you want to be. So learn from your losses, recover from them, and then succeed despite them, and have that define you. Remember, you can bounce back, be strong, and be resilient. Thursday, I recommend all traders place a cap on their trading account and transfer out profits at the end of the week. That way you are less tempted to ape up the risk threshold. This is actually one of my oldest quotes. I think it's 2016 or so. The idea is that there's a tendency when your trading account gets really big, where you start to think, "Oh, okay, oh, I know I started with this amount and I'm up to this level, so now I can kind of afford to gamble. I can afford to play around for fun." And what's going to happen is if it just keeps growing, you're going to start risking more than you should. You're going to start foregoing your natural risk management practices. You're going to be reckless and you're going to lose the money. And if what you do is you transfer out some of those profits, what you do is you pay yourself for a good idea. That money becomes real. It's back in your bank account, and you're going to stay disciplined to your original starting amount, right? You don't want to ape up the risk threshold. Ape up meaning just kind of going crazy and just ramping it up, because honestly, the biggest losses come after the biggest wins. So this is about managing yourself in success, because success really can be a real enemy and a real challenge if you don't deal with it properly. Proper bankroll management, like I mentioned here, is critical to surviving the long run as a trader. Friday. If you're on a surefire winning streak, the one easy way to derail that train is to become overconfident. When you become overconfident, you think that no matter what, you can't fail. Even though this is a downtrend, I'm going to try to buy a bottom, right? You go against what you know are the proper techniques, which is to buy dips in uptrends, sell rips in downtrends. You think, oh, I can afford to go against the trend. I can afford to take some extra risks here because everything I'm doing is great. I'm wonderful. I'm the best. I've figured it out. You're overconfident, right? And when like I said in the prior tweet, when you get on this winning streak, you tend to have big losses because you think you're untouchable. So you have to be really careful with becoming overconfident. Of course, you want to be careful of being underconfident. If you find that you're lacking conviction, you're lacking confidence, you probably should do nothing and take a break and come back, with those things, conviction and confidence. But you need to be really careful when you find yourself in this type of a win streak and you feel like you're invincible, right? I actually have a video I just put out on this, or actually just recorded. It hasn't come out yet for the Trading Encyclopedia. Saturday. I'd rather miss a move than be on the wrong side of one and have to pay a penalty. It's a really great quote from this guy, Sunrise Trader on Twitter. And he says, I'd rather wish I was out of a trade than wish I was in one. Right? No, I'd rather wish I was in a trade. Sorry about that. I butchered that. I would rather wish I was in a trade than wish I was out, right? Like he'd rather miss a move than be in a bad trade that you're stuck in, that it owns you. You have a massive loss, right? It's like, I'd rather be late to the party than show up at the wrong party. It's the same concept. So this is telling you to be careful. This is telling you to wait, to be patient, and to resist the FOMO. FOMO is one of the hardest things to deal with as a trader, especially if you're on a down streak. If you're failing, you think that this next trade is going to make it up for me. But you have to remember, there's a major penalty for being on the wrong side of a move. So wait for confirmation. Wait for more information and more evidence. And remember, it's much better to miss a move than to be on the wrong side of one. Apologies to my friend for butchering his quote. Sunday. In many ways, the difference between success and failure comes down to the ability to stay cool under pressure. Do not panic. We know from experience the best trades often come after volatility. They often come in the middle of these market panic moments when other market participants are panicking. Other market participants are freaking out. They're overreacting. There's opportunity for us there. And success, often the greatest success, can come on those days where there is panic, there's volatility. You stay cool under pressure. And helping you to stay cool under pressure is you've put in the work ahead of time. You've studied the charts. You have a good plan. You know what volatility means when the price interacts with key levels, and you can execute your plan because you're prepared ahead of time. So putting in the work ahead of time will help you to remain calm and will help you to, find success rather than failure under these market panic type of moments. Monday. Week 19. Every day, your goal as a trader should be simple. It should be to get a little bit better and to learn something new. Profit will come as a result. And this is very much a, trust the process type of tweet, right? Or quote rather. And it's hard when you're in the moment and you're failing. It's hard to think, okay, I'm going to make it, because you're in that moment and you're thinking about that last trade that failed and you're thinking about whatever, immediate obstacle you have. But it's the big picture. It's the long road. It's remembering that you have to make mistakes and you have to survive those mistakes and learn from them to get to where you want to be. So your goal should be every day just to get a little bit better. Slightly better, get in a few more punches next time. Even if you get knocked down, you got in a few more shots. And that's the goal. Learn something, learn from your mistakes, and eventually it's going to work out because you have a good methodology, you've built up the muscle memory, you have the experience, and you can navigate the market. Tuesday, do not expect to succeed as a trader without suffering repeatedly before you figure it out. And it almost seems like these two quotes can go together. And it's the idea that you can't just figure it out initially. I mean, you can start anything as a new hobby, as a new thing you're trying out, and you can have beginner's luck and you can think you've got it figured out. But in reality, you have to suffer. You have to fail. It has to sting for you to want to fix it. You have to go through these brutal experiences to learn what not to do, to learn what works, what doesn't work. And having the right attitude ahead of time will set you up, understanding that it's probably going to be really hard, maybe for a long time, rather than thinking it's going to be easy. If you think it's going to be easy, you're going to give up immediately and you're not going to get anywhere. But if you understand that you might have to suffer, you might have to go through an incredible amount of challenges to get to where you want to be, then you have a better chance of surviving that process. Wednesday, moving average crosses work better in trending markets than sideways markets. Just as a reversal candle needs a trend to reverse, a moving average needs a trending market to cross and reverse from. So when you're in a situation where everything is moving sideways, the price has been sideways for 20 candles, well, guess what? Everything up to 20 is going to be sideways. The 8, the 12, the 20, whatever, moving averages you're using. Even longer term ones, 34 and 50, will start to become sideways. And the idea is with a moving average cross, you want to have a trend to reverse, just like a reversal candlestick in Japanese candlestick theory. For a hammer, the classic bullish candlestick, you need that to come after a bearish move down. Otherwise, you have nothing to reverse. So for a moving average cross, when you're crossing in a sideways market, what are you crossing? What does it mean? It's nothing. Nothing's being reversed. What's the opposite of sideways? It's just more sideways, right? So you need a trending market, and almost every tool really in technical analysis, almost everyone really works better in a trending market. And that's the whole idea as with TA is you can identify a trend and you can identify a move against that trend and hopefully take advantage of it. Okay. Thursday, keep your mistakes small and live to trade another day. You want to let your winners ride and cut your losers early, because every massive devastating loss was once a small loss begging to be cut. And we know we're going to make mistakes. We know we're going to have errors. We're going to have failed trades. And rather than doubling down on them, we accept them, we take them, we take our medicine and we move on and we take the lessons from it, hopefully, but we don't add to our losers. We don't double down on failed ideas. We know that we have to live to trade another day. We have to survive. We have to protect our bankroll, and we have to accept when things don't work out and hopefully accept it very quickly. So keep your mistakes small and you'll have a much better chance of living to trade another day. Friday, the only thing worse than watching the news is trading based upon it. So this is a little bit cynical, but it's true. It's the idea that, the news is obviously very much for entertainment, right? Things are said to get you excited, to get you angry, to sell advertising. And if you get into a habit of trading based on the news, you're going to be in a lot of trouble because the news may sell you a narrative. Oh, this should be $100. This should keep going up, or this should keep going down. The problem is the price trend may or may not agree. And the price is what matters because at any given point, when you buy something or sell it, that's what the price is. That's what it's supposed to be because that is the summation of all known public information at that point. This is what it's worth. That's what buyers and sellers agree upon the price in that moment. And you trade based on the news, it's very easy to get the tendency to, believe the price should be somewhere. It should be something, right? It should go higher because of this deal. It should go higher. Well, let's wait and see, right? If you think it should go higher because of some partnership deal, just wait until the price breaks resistance. Like let the market tell you if the news matters, right? There are many quotes on this. Many people have expressed the same sentiment, but it's not about the news. It's about the market reaction to the news. So do not trade based on the news. You're going to get into a lot of trouble. Saturday, a true chart technician can articulate both the bearish and bullish thesis. No blind spots. Now, in theory, most of the time there should be a clear read. Unless it's a pure sideways chart, there's no trend. Most of the time, it's pretty clear if it's an uptrend or if it's a downtrend or the situation, right? It's a retest of support. It needs to hold here. Much of the time, at least for me, at this point in my career, and as I teach it, it should be pretty clear much of the time what's important, what needs to be watched, what needs to happen for a trend to progress. But this quote speaks to the idea that you want to challenge yourself. So you say, well, if I think this is going to happen, where might I be wrong? And so you would say, okay, what would the bearish thesis be? And what would be a level which I would have to abandon that bullish thesis? So it's about checking your idea and saying, well, what would the other side of this coin be? And at least examining that and at least saying, okay, well, what information would I have to get in order to prescribe to that thesis rather than the one I currently have? So a true chart technician is good enough to read the chart and understand where an idea would go wrong, right? And understand where an idea would be invalidated and you'd have to switch to the other direction, okay? Sunday, with any breakout, you would like to see volume expand to confirm the move, indicating that market players are putting funds to work in the direction of the trend. If volume is missing, you should be a little bit more suspicious. Now, this is classical charting for sure. With any kind of breakout, breakouts perform better with volume on the breakout because as it says here, it suggests market players are putting funds into the direction, of that break. And for example, like reversal candles, like you want heavy volume on a reversal candle because it suggests a reversal in momentum. And a breakout is a continuation of momentum. So you want more volume on the breakout to confirm the continuation of that momentum. So you don't always get it. We don't always get the perfect setup. We don't always get exactly what we want to see in terms of volume, in terms of price structure. But you are better off absolutely on some type of a breakout to get volume confirming the move. And that's very much a basics of volume. And I go over that in my other videos. So this is, folks, weeks 18 and 19. I'm really having fun with this series. And this is for my Trading Quotes, a daily dose of trading wisdom playlist. I have published 4 books, and you can see the 3rd book right here. My new book is out, The Trading Journal, and that's why I'm making this book free. I want to make these my works available to everybody, right? And that's the whole idea. At my YouTube channel, you can watch my entire cancer memoir for free. I've got Trading Wisdom 18 lessons for free, and now I'm doing them all in Trading Encyclopedia. So I'm actually going to have the entire Trading Wisdom book for free here. I'm doing my Trading Journal book for free as well in Trading Encyclopedia, and this dedicated playlist for Trading Quotes. So that's what this is, and I really hope you folks are enjoying this video series. I really would encourage you to watch the Trading Encyclopedia. It's going to help you kind of level up your skills And I'm really proud of it. I'm really having a lot of fun with it so far. So you can find me, of course, on Twitter at Big Cheds. You can find me on Bitcoin Live at Big Cheds as well. And here I am on YouTube at Cheds Trading. So, folks, thank you so much. Thank you for letting me ramble on here for another episode of the Trading Quotes. And we're going to finish up with the dancing, of course, Church of Eight Wheels. So, folks, thank you again. And let's get it going. Thank you, everybody. I hope you're doing well. Big Chad out.